Welcome to the channel. Trader Jan speaking. Today is Monday, the 13th of April, 2026. This video is about the review of the trading day from Friday, the 10th of April, where, as usual, I have two topics. One is the locations I defined for the trading day. Did they work out? Would they have helped if I would have followed them? The second one is reviewing the trades, which I actually did on that day. As you can see, the Asian market is already open. It is now 9:41 in the evening. This is all Chicago time. All is where the CME is located. And this is my trading chart, the 200 delta charts, and this is the micro from the NASDAQ. So looking at the 50 minutes chart first, which is our chart for defining the locations. As you can see, the market opened already 1300 ticks below. There's a huge gap. Big question of the day gonna be, is the market willing to close that gap? Now, just focusing on this area, which is Friday, I said at the time when the market goes above that one, then I'm more long. Should have followed that idea, I guess. You can see my trading results, which were not extremely positive in terms of results. But looking at the locations, the analysis was done around this time here. So this location was known already, that location was known already, so I shouldn't be too proud that this one worked out. This one worked out here as well. But it went actually to the next location and then back down. And here we see the importance of adapting the charts at the locations throughout the day. At this one here then didn't quite make it until the bottom. But overall, location-wise and typical Friday, it's not a really extremely bright market, 700 ticks. Not too much expansion. So typical Friday is more a range trading day. So as we see here, the market seems to be wanting to grind up, but that's not of our concern right now. I want to focus on, let's see, let's get that one out of the way here, not too busy. Those are the trades which I did on Friday. A lot, too much, too many, especially here at the end, where then wasn't the deep red and I wanted to save today. Here at the beginning, I'm gonna go through some of the trades. I'm actually, even though the overall result is not too positive,
New candle.
at the end, it was the results, the trading discipline was, at least at the beginning, I'm not too unproud of. Let's go through the trades by themselves. Actually, in terms of overall results, moment, let me sort that one first. In terms of the overall results, I made minus 203 ticks in 32 trades on Friday between 8 o'clock in the morning and lunchtime and 1 o'clock in the early afternoon, all Chicago times, all in Chicago time. And let's walk to some of the trades here on the chart. The way I review my trades is I mark them here on the chart, and the bluish kind of background is a long trades, the grayish kind of background is
New
short
candle.
trade, and the frame defines if the trade was
New
a
candle.
loss, like red, or a profit, like green. Now I'm curious why it's yelling at me new candle. Oh yeah, it got now a little bit of a boost going up here. One of those things where I tell myself, oh, I should go in, should go in. But once I feel that's an emotion, and I should hold myself back and say, okay, no, that's acting based on emotions. Not always, I'm not always too good in that. But coming back to the trades, um, if I look at the beginning of the day, so looking at this area here, so I had like, that's my location. It went up from the location, it had a short-term price action upwards, so I went in here. So that kind of trade I would do again. This was an entry. Okay, I went out of the trade not at my stop loss. My stop loss is usually 100 ticks, but let's see, it would have worked out because the overall direction was indeed long. The market just does what the market does. It goes up and then it goes back to the locations, goes up, goes back. It's really annoying. So that's why it's good to try an idea once or twice. I guess I should have tried it again over here and then just trust my trade stop loss below this one here and then let it run. However, that trade, even though it was a loser, I'm okay with it. Now I did the second entry here and then the market like stagnated and it was 8:30 or short before 8:30 and I didn't want to be part of that mess at in the first seconds of the market. So I thought, okay, good, then let's go out here. I could have stayed in and another 100 ticks and blah, blah, blah. So it was a good trade. That one as well, the entry was good. There was, let's say, I guess not patient enough. Here, that trade, too late. Price action, okay, confirmed my idea, but it was too close to the my target already. So that I should have waited until like something like this one here coming back and then going up again. And even that one here, I would not have entered right away here. Maybe I should. I would have entered somewhere here and then it would have been something like 50 ticks, which I did enter here, but then I did go out too late. But even though in that case, I went out after my setup had been um, unconfirmed. How do you say? Had been made invalid. So this one here, the market went up, but then when the market goes below that's higher low, then I went out. So it was a losing trade as well, but I was rigorous in cutting the losses, which I think was a good thing. Now here, after I saw this dominating candle here, it went back up and I went in, chickened out somewhere here, so only 30 profit. Could have gone a little higher to this old high here, could have been 100 ticks. Not too bad of an entry here. That I turned that one into, let's say, this one was a long winner, and here I saw, oh, maybe I was going out too early. So then I went in again, but then I went out too late or late, but not too late because once again, this one was broken. So I went out right there. Not too bad either. Here, another one, the bounce of my the location here. Could have stayed a little longer until here it's clear, but okay. Then here, went short, back to the location. Nothing to complain about that one. This one here was a bit weird. That one is okay. I would have guessed I go up there, but I thought it was bouncing off too fast here. But after the confirmed short-term price action, it was relatively clear, should have been relatively clear that a long here would not be wise to do. So, but I did a long, I should have done a short right here or after that one here, should have done a short. My 100 ticks would have worked out and then down to the location. Or, and for the ones who follow me, they know that I'm a fan of volume. I got a little indicator here, which I called market footprint. That one is marking all those candles which have more volume than usual. And how do I define more volume than usual? A little deep dive into my market footprint indicator. I think I should do a tutorial video about that one, but I don't have it yet. The market footprint indicator is taking the volume like those peaks here, putting them on a threshold. The threshold is calculated based on a so-called score, which is, I want to have an indicator where I don't put a fixed threshold like, okay, maximum if a candle has 3000 volume, whatever. No, the band here, the C-score band, makes sure that that indicator works in every market and it adapts to the market conditions. So as you can see here, this one here, this high volume here, this one was being held here. It broke here, but with, as you can see here, with not a lot of volume. And breaking something with not a lot of volume is a good sign of a reversal. So this one was fake out. And then if you see this one again, this one again, this one again. So I could have used that location here for quite a lot of nice entries if I would be more confident in my setups, in my own setups. And if you throw that one further, then here it finally broke down with substantial volume. So it went down, went up, and then that coincided with the VWAP as well. So could have done more trades, more short trades here if I would have considered that one. This long here would not have been wise to do. Here I should have done a short right here, even though it's before my location, or a short right here after the confirmed short-term price action, short right here. Anywho, 3 trades which I'm especially proud of is range trading trades, and these ones were here. So I saw here at the time, let's see how it was when I actually saw the trades. So that was the first trade. So what I saw here, market came down, it bounced off that's a higher volume, and then went back up and then went back down again. But I believed in long-term price action here. As I said in preparation, overall over this range here was more long. So then I said, okay, if you're in a range, my little friend, then I'm gonna try to trade between those boundaries here. And that was a range of 135 ticks. Now here I've found this one here, that's a low volume area here. Sometimes the price gets rejected. So I entered here, exited at the boundaries. Then entered here again, the market went a little against me. My stop loss was down here. And then I exited at the end of the boundary again. I didn't want to trade short. even though might have been after the facts now we know, right? It would have been a good idea. And here, entered again, exited here. Then the market came up here, and then I thought, maybe that range is now not that valid anymore. And yeah, that was the range part, which I'm not unproud of. Now, bad things happen then later on. I was in the plus until somewhere here, and then I wanted to save the day. I had like back-to-back trades and all this weird stuff going on. So not a good idea. My emotions and my greed and whatever it was caught the best of me. So having said that, this was the video about the trading review of Friday, the April the 10th, 2026. And now I'm gonna check for the market preparation for today. What are the locations and what shall I wait for before I enter a trade? Until then, enjoy your day and see you at the trading floor.